Welcome everybody to the Magnet DAO AMA with Yeti Finance. Super excited to be here. Little details on what this is all about. We're talking with Yeti. We want to hear about their launch. We're going to be talking with the team here, asking a lot of questions. This is first of a series of AMAs that I want to do on Avalanche and new projects. Magnet DAO is all about focusing on new crypto projects, investing in them, incubating them, helping them out in any way we can. And this AMA is part of that. We've had the Yeti team on prior, and we're super excited to have them now this close to their launch. I think Testnet is coming up mid-January, and then I'll let the team speak to the timeline on everything else. But super glad they're here. This is again going to be recorded, so if you need to pop off, that's all right. We'll have some recording for you. If you've got questions for the team, I want to make sure we have those at the end. Put those in our chat in the Magnet DAO Discord under the AMA questions, and stick around until the end. We're going to give away some 200 mag to somebody that's with us for the whole time. So with that, I think we're ready to get going. I have a series of questions. I sent them over to you, and we'll ask some more later from the crowd. But let's hear from you guys. What is Yeti Finance?
Yeah, for sure. So Yeti Finance represents kind of the next generation of borrowing in crypto. We've been around the space for a while, 2 to 3 years for most of us. 0x Talon was around back in 2016, investing in Bitcoin, and kind of we studied the space quite deeply and really took the best parts of every borrowing protocol out there, as well as kind of the latest innovations in tokenomics, in protocol on liquidity, and packaged them together into what we see as kind of like the most innovative and the next generation of borrowing in crypto. So we allow users to deposit their entire portfolio of assets on Avalanche as collateral in order to mint our stablecoin. So this includes assets like ETH, AVAX, as well as staked assets like XJoe, LP tokens from Curve and Trader Joe, as well as other yield-bearing collateral such as depositor collateral on Aave or Banky. We offer up to 11x leverage, as well as zero accruing interest. So you can borrow with Yeti Finance and lever up on your favorite assets while just paying a one-time fee. Yeti also allows you to do leverage yield farming, which means you can continue to earn your farming rewards while your assets are being used as collateral. And what that means is even at kind of conservative collateral ratios, you can lever up, for example, 4x and earn 4x your yield, 4x your farming rewards while using Yeti. Yeti Finance intends to become kind of one of Avalanche's flagship protocols, like Trader Joe, and we built the partnerships to do it and also to create Avalanche's native stablecoin at the same time. We're starting off with borrowing, but that's really just our first product. We plan to build strategies into Yeti, kind of like Yearn, where you can deposit your USDC or AVAX, and we optimize your yield on your behalf. We also plan to build options products like Ribbon to earn additional yield on your deposited collateral, and flash loans and more. So kind of think of Yeti as Compound, Yearn, Alpha Finance, Ribbon put together in one. And that's where we're headed. And we're excited to be doing it here on Avalanche.
Awesome. That is a huge number of things that not only are you looking forward to, but you're launching with. And at launch, am I going to be able to use all of my Avalanche assets to get loans against, or is it going to be a select few and then you're rolling more out as time goes on? How's that going to work?
Yeah, so we have a whitelist. So there's a whitelisted collateral, but at launch, we're going to be launching with quite a significant number and rolling more out as we go. So at launch, that means the day we launch, you're going to be able to borrow against your Trader Joe LP tokens, AVAX, WETH, WBTC. Those are the base level assets, as well as Aave tokens, Banky collateral, and soon post-launch is Curve LP tokens as well.
Nice, very cool. A lot of folks know about MIM, Abracadabra. Even on your guys' FAQ, you compare yourself to them. I'd love to hear kind of what differentiates you from Abracadabra.
Yeah, definitely. I think first of all, I just want to say like Abracadabra is a solid product. They've done a great job in terms of branding, marketing, and so on. But we believe we made some key improvements and innovations on that first generation or that starting place for a borrowing and stablecoin product. So to start out with, we have zero accruing interest. So with Abracadabra, you'll pay a fee, and the longer you hold your loan, the more it costs. Versus with us, you pay this one-time fee when you first borrow, and from then on out, you can keep your loan outstanding as long as you want, keep your YUSD as long as you want, and continue farming without even thinking about accruing interest. Next, obviously, we have a lower minimum collateral ratio. So with us, you can go as low as 110% collateral ratio. Whereas with MIM, typically it's 130 to 150% on a similar asset. And the reason we're able to do this is this highly efficient liquidation mechanism that comes from liquidity. So rather than requiring external liquidators to come in and pay off loans, we kind of handle it within the protocol. And this means we can liquidate faster and have less reliance on other parties in severe market conditions. A couple other key features. So first of all, cross margining, which means kind of your entire portfolio can be used in one loan. Versus with Abracadabra, if you have some W memo, you can deposit that, take out a loan against your W memo separately, take out a loan against your AVAX separately on your ETH. Whereas in our case, you can combine all that collateral into one debt position and one trove. And what this means is really your entire portfolio has to drop in value for you to become at risk of liquidation. So that means if your W memo happens to drop in value, but your ETH and AVAX remain strong, you'll still have a ton of collateral in our system and we won't have to liquidate you. Whereas in Abracadabra's case, each asset represents a different debt position, and if your W memo were to fall, then that loan will get liquidated and you'll lose your W memo. Next, we have the hard peg stablecoin. So if you own one YUSD, you know that you always have the right to redeem it for the collateral that backs their system at a one-to-one basis. So one YUSD can be redeemed for $1 of collateral, minus that small redemption fee. And kind of we're strong believers that a stablecoin has to have these type of hard peg mechanisms in order to become really well trusted and in order to have a foundation on which to claim like we're going to be Avalanche's native stablecoin. When you look at a stablecoin like MIM, there's no redeemability and there's no kind of mechanisms to really ensure the peg remains solid. So Abracadabra is kind of partnered with FTX, who does market making on the stablecoin, to help keep peg. They do their best, buy and sell, to ensure the price stays relatively stable. But we're strong believers that this hard peg type of model is the one that's going to be successful in severe market conditions. Things like, Black Thursday or the crash back in March of 2020. And that's why we've built off liquidity, which uses these type of mechanisms, and why we're strong believers that YUSD is a stablecoin that's going to be trusted on Avalanche.
Awesome. Yeah, it's I think one of those things about stablecoins that people are constantly worried about is how can I make sure this is stable, and to hear that there's market making that's happening, and it can be a great thing, especially MIM's stable because it's just there's so much out there, it's everywhere, it's ubiquitous, it's on Curve, it's everywhere, but to not have something on the other side that the protocol itself is doing, like a stability pool that you guys are going to have, these different things that ensure it. It just seems so risky. It's great to hear. I want to take a step back. We talked about the protocol a little bit. Tell me about the Yeti team. Tell me about yourselves. Introduce yourselves. What's your role on the team? Any background that we should know about the team?
Yeah, definitely. So yeah, first shout out to all the Magnets and Yetis who showed up today. Really appreciate everyone coming out. To give you a little context on the team, we're a core team of 7. We have 6 dedicated Solidity engineers and 1 dedicated business lead, which is me. We have a couple contractors on the design, art, and front-end UI UX side. But for kind of the protocol design part, it's mainly kind of us 7. And kind of the backgrounds of the team, I think about 4 out of 7 of the team was working in DeFi previously. So some people like RoboYeti, he worked at a leading L1 Ethereum protocol. One of our teammates worked at a well-known auditing firm, one at an NFT blockchain company, another one kind of doing MEV, quantitative trading in crypto. And he's kind of the person that leads our liquidation and bot mechanisms. We also have people from traditional tech backgrounds, like Truco and I. I worked at startups doing product. Truco did engineering. We have Festive, who worked at Google doing AI. But yeah, we were all kind of involved in DeFi in some capacity, all kind of contributing, building things on the side, aside from our kind of day to day. And we kind of thought that there was an opportunity to kind of really innovate in DeFi. And the kind of opportunity we pinpointed was the lending and stablecoin side. And that's kind of why we all came together. We all knew each other kind of as friends before doing things in the crypto space. But we kind of really decided to work and build something together. We're kind of the 3 co-founders of Yeti, but our team is really a flat hierarchy. So we don't really have, kind of managers or some sorts. It's kind of, we thought, 7, kind of the 7 people that we brought were really talented. And we just really wanted to come together and build something really big. And that's kind of came to shape in the form of Yeti.
Nice. Yeah. So I'm hearing a lot of experience, a lot of interest in it, thinking through kind of what's necessary, what's needed, and outcome, stablecoin lending protocol, and more to come. You mentioned that you want to be the premier kind of stablecoin of Avalanche. Why Avalanche and not another chain?
Yeah, that's a great question. So kind of we had, I guess, like the team members in DeFi were already building in ETH. And so they already knew kind of Solidity. And we kind of looked to like what's the best EVM compatible L1 chain. And why not Ethereum in this case? Well, we kind of thought that, building on Ethereum kind of now at this point, you're basically building for whales. To do a kind of a transaction in Uniswap LP, it might cost a couple $100s. And kind of what day-to-day person can really afford to do that if you don't have, tens of thousands, if not hundreds of thousands, usually millions. Like the average loan on Abracadabra is $1 million. And kind of, we wanted to build something that, was just not used by like kind of the top 1%. We wanted to build something that could be used by like day-to-day consumers and that day-to-day developers can build on. It's also really expensive to deploy smart contracts on Ethereum. It can get up to like tens of thousands of dollars if you have a really big protocol. And kind of we chose Avalanche as the EVM compatible L1 we wanted to build on because kind of twofold. So one, we thought the tech was the best. So in the form of things like, finality, transaction speed, gas cost, things like L0 subnets, which kind of unlock a really exciting feature. And 2 was kind of the team behind Avalanche. The team there is very experienced, both in the technical side, in the founder being, a professor at Cornell specializing in blockchain, as well as really talented on the business side. We think that they have in the form of, let's say, Avalanche Rush. There's a skier, there's a red helicopter. These are kind of very vivid images and that kind of catch retail attention onto Avalanche. You kind of see this both in their kind of like sponsorships as well as their kind of partnerships, the partnerships with Deloitte, Bank of America, and whatnot. And just Avalanche in general has been a very supportive L1 as a foundation and a community. People like CryptoFish have been helping us since day one. We kind of approached him anonymously and just kind of asked him for advice and more because we wanted to build a product that took, JLP tokens in our platform. And he was just responding to us on Discord. And, we see this not only in protocols, but Avalanche Foundation themselves. People like Luigi and whatnot are happy to, really give it their all to kind of help Avalanche projects. Well, that means taking a call, on a Sunday or introing to people after hours. I remember one time Eric kind of messaged me. Basically, he's from East Coast, and it was like 1:30 there. He messaged me back about something I asked him. I think it's both kind of the community, team, tech was just really the best on Avalanche. And that's kind of why we decided to kind of go full Avalanche native. And another part that comes with that is the product advantage. Because we're focused on Avalanche itself, we can support collateral types that are kind of too big for other borrowing platforms or too small for other big borrowing platforms to support. Our kind of plan is we want to integrate and prioritize Avalanche products and tokens to integrate with. And we think that's not only going to grow the ecosystem, but it's going to be kind of a big product advantage for Yeti. And Abracadabra right now, you can only borrow against a handful of assets on Avalanche. But with Yeti at launch, we plan support 20 plus. That's kind of how we see the future in terms of product, in terms of putting where our money is.
Yeah, I'm super excited for the number of assets you guys are going to have, and shout outs to Blue in the audience. I see looking for any other Avalanche folks. I've definitely had that experience with the Avalanche teams themselves. It's just super accessible, super helpful. Luigi has a couple of projects that I've been. He's been like huge on getting us launched, getting us some help that we needed. Same with Crypto Fish, Blue, Trader Joe in general. Like, there's just a great community of builders that want to help each other out here. I love Avalanche for just for that, along with everything else. So we've talked about kind of the protocol a little bit, Avalanche. I know that you guys you'll have YUSD and then you'll have Yeti as your own tokens. YUSD is obviously the stable coin. We talked about that a little bit. What's Yeti going to be? How's it going to be used? What's the tokenomics?
Yeah, great question. Yeah, exactly right. So we have two tokens, the stable as well as our protocol token, which is Yeti. Which eventually will be used for governance, but starting out, it's no governance for now. And the Yeti token kind of represents equity in our product, and Yeti stakers are rewarded with protocol revenue. So anytime someone takes out a new loan, deposits collateral into the platform, there is a fee paid in YUSD, these one-time fees. And those fees are used to buy Yeti off the market, and that Yeti is distributed to Yeti stakers over time. So it's kind of similar to the Abracadabra spell and S-spell model. And the idea is that, first of all, protocol revenue is collected, and then over time it's used to purchase Yeti off the markets. So we have constant buy pressure on Yeti, and then that Yeti that's then purchased off the market is distributed to stakers over time. So constant buy pressure, and then also a consistent revenue stream for the Yeti stakers, as opposed to it all being distributed at once, which incentivizes kind of long-term behavior and continuing to hold Yeti over time. And overall, in terms of how we're thinking about tokenomics, we really have this big vision, and it's important to take a long-term view and retain significant assets in the treasury in order to execute this. We want to end up in a position like Uniswap where they have hundreds of millions, billions in the treasury, and put Yeti Finance in an extremely strong strategic position. And so that's why we're carefully strategizing to get cheap liquidity for the stablecoin in the long term. So we're looking at close collaborations with potentially Redacted Cartel, for example, to do some sort of bribe program where we can utilize curve rewards in order to get liquidity at a cheap rate without giving away too much emissions too quickly. At the same time, it's extremely important to us to reward the community who uses the product and who has helped us get to this stage. So Yeti will be a community-owned project, and the token distribution and the strategy there will represent that.
I know you said you're not going to be launching with Yeti as governance token just yet. Do you have an idea of where you're going? Are you going to be forming a separate DAO format? What are you thinking as far as governance in the future?
Yeah, so Yeti itself will launch the day we launch the protocol, and the day we launch, it'll be simply a way to get protocol revenue and kind of invest in the vision of Yeti. And in terms of how we're thinking about governance, we definitely want to decentralize aspects of the protocol as quickly as possible, specifically whitelisting new collateral, setting safety ratios, setting caps on those collateral, and we are like strong believers in the idea of decentralized systems that are completely independent of any team. And so these are the core functions that we want to be placed outside the control of the team as fast as is possible to do safely. And so that's kind of the first steps in terms of making Yeti a governance token and creating this DAO around it. And I think in the long term, or within the next 3 months, I would imagine that these types of decisions are made by the community as opposed to the team.
Yeah, that totally makes sense. I think one of the things that as I was looking at your breakdown, is kind of that move towards decentralization. I think that's huge, and being able to not only be decentralized, but with the mechanisms you guys have put into the protocol, not even having to have people intervene during events to make things work. It's the system's just going to be work. There's going to be bots liquidating. There's going to be, and the human element is choices in the DAO, with your governance. I think that's a really smart move for a stablecoin platform, lending platform. Let's talk about the stability and security of the platform. What measures are you taking as a team to make sure that Yeti, as it launches, is secure and safe with user funds?
Yeah, that's a great question. And kind of how we think about security with Yeti is that we think we're really an innovative protocol that's not just like a fork. It's kind of pushing DeFi forward. And with that, user funds is kind of securing user funds is a top priority. So how we think about it, it's twofold. So one, it's smart contract security, and two, it's economic security. So in terms of kind of smart contract security, we've undergone 3 full smart contract audits. The first being Heichi. It's a leading smart contract audit firm based in South Korea. They've audited like SushiSwap, 1inch, Armor. We also contracted DDAO. It's a boutique smart contract firm that specializes in economic attacks, program analysis. It's led by Giannis, who's I think he was a former UT professor and UMass professor. They worked with Ethereum, Chainlink, NXM. We really enjoyed working with their team, talking about protocol design and kind of decisions that we've had to make. That audit report will be coming out shortly. The Heichi one was already published. And kind of for last smart contract audit, we had a public Code Arena audit contest. So we had a $100,000 pot. It was a 1-week contest, and that $100,000 was distributed at the end of the week to participants. And kind of the participants there are top security researchers from places like QuantStamp, even smart contract security firms participated, and we were pretty satisfied with the results. We think there was a lot of kind of good submissions, both from a smart contract side and an economic security side, and there was also a lot of kind of gas optimization tips that people submitted, and we kind of think with all these submissions combined, our smart contract security is pretty close to being safe in terms that we've basically done everything we can. Kind of spent almost $500,000 in both economic and smart contract security. I think Truco, you can talk a little bit more about the peer reviews we've done as well as economic security.
Yeah. So, in addition to all these other, full smart contract audits as well, we undertook some various independent auditors to take a look at specific contracts. That's kind of just like adding on to those full, full code based audits. So particularly some of the wrappers that we use to keep track of like LP token rewards, for example, those were like, so we had some like independent auditors look at that. And then as for economic security, we really wanted some people to look at specifically the fee modeling that we were using, and what how our system would react in really like adverse market conditions, to make sure that user funds are safe. Like all this stuff is everything is kind of like running properly in terms of like a black swan event. So essentially we contracted a team of 3 world-class economic modelers and engineers led by 0x Verif. and they're creating an economic model to report on the like economic soundness. And this team has engineers from protocols like MakerDAO. And we're not directly associated with MakerDAO, but just showing that these engineers are world class and they kind of know what they're doing. Additionally, we're also getting an economic security review from Risk Harbor, which is a top insurance protocol, and they're auditing stuff like our LP oracles and asset wrappers to ensure that these price oracles can't be manipulated in economic attacks like the Cream Finance hack, which was pretty recent, like stuff like that. We're trying to make sure that that type of stuff doesn't happen to to the Yeti users. And both of these reports are coming back shortly, and then we'll use these results to fine tune the whitelist of collaterals that we'll take as into the system, as well as the minimum collateral ratios for these assets. So yeah, through the the breadth of these security measures, we hope that our protocol is as resistant as possible to all these different attack vectors, and it's like safe for all of our users. So we believe we've done a lot in terms of like making sure for security stuff. So
awesome. So I there's a lot. I get the feeling that like this has been a really key point for you all. You've got independent audits you've paid for. You've got the community doing it as well. You've got economic audits ongoing. You're taking it safe with this testnet launch coming up. Tell me about the testnet launch real quick.
Yeah, so kind of the target for this testnet launch is January 14th, which is coming up this week. I think it's Friday. And basically, yeah, it'll be a public testnet run on Avalanche Fiji. Anyone can go on the Yeti Finance front end, test out the protocol, practice strategies that they might want to run when a protocol is live. And with the testnet, we plan to be hosting an event. So participants that play with the testnet or participate will be distributing some Yeti NFTs that we've made with in collaboration with Gokek, who's a pretty big Avalanche NFT artist, and that's just kind of a cool way for us to give back to the people and kind of celebrate the launch of our testnet. But yeah, we think the testnet when it's released, it'll be pretty polished in the sense that it basically almost be like the mainnet protocol. It's just basically a week to kind of have users test out, see if there's any bugs from a kind of visual standpoint, or if they just want to, practice using the protocol, without spending real money.
Nice. And then after this testnet launch goes, let's say it goes well, perfectly, timeline's going great. What's the launch going to be? And then how can people here participate in the launch itself? Is Yeti going to be listed on Trader Joe? What's that going to look like come launch time?
Yeah, great question. So basically, Yeti Finance is launching via farming launch. So basically, there is no IDO or public presale. Yeti will be listed on Trader Joe for it to be bought and sold by people that have Yeti. But essentially, to get Yeti, users can get it 3 ways at launch. So one is basically staking YUSD, which is our stablecoin in the stability pool. And basically this gives you Yeti as well as a share of liquidation profits. And to get YUSD, you can either buy it off a place like Trader Joe, or you can deposit assets on Yeti and mint YUSD. The second way to get Yeti is to liquidity provide on Trader Joe. And the 2 pairs that will be listed there is Yeti AVAX and YUSD AVAX. And the third is to LP for YUSD on Curve. And that's kind of the 3 main ways to get Yeti, aside from buying it on Trader Joe at launch from other people. I think kind of the recommended strategy for most projects at launch is to farm the token, and whether that be the stability pool or LP, instead of buying it, just because there's when a project launches, there's not that much token emissions. That usually means the par value of the token is very high. So yeah.
The Magnet DAO would know nothing about that initial price at launch issue. Nothing about that at all. I'm kidding. speaking of Magnet DAO and Yeti, we've got you on. I would love to hear what you all think are the synergies. I mean, we're Avalanche focused right now. We've got Magnet. We're going to be incubating small projects, new projects on Avalanche. How do we work together? What's the synergy there?
Yeah, I think there's a lot of potential for collaboration. And I think overall, we're super excited to work with Avalanche native projects and really grow the ecosystem together. In terms of specifics, like the obvious things are, first of all, I know Magnet DAO recently passed a proposal to use treasury funds for yield farming, and this is a great way to use Yeti. Yeti is not only for the everyday consumer retail user on Avalanche, but also protocols. So Magnet DAO could use Yeti to lever up on their assets and yield farm more profitably. So, for example, one strategy we are really excited about, we expect to see a ton of usage on, is levering up on stablecoin yields. So that means, let's say you want to earn some yield on Banky. You can deposit your Chi tokens, these like Chi USDC, Chi USDT, on Yeti Finance and lever up. And 5x, 6x, maybe 10x, if you're feeling more ambitious, 10x your yield on your stables. So I think this will be a great product for all sorts of protocols in terms of managing their treasuries. And the second thing is potentially bonding for YUSD and then YUSD LP tokens as well on Magnet DAO. So YUSD is really great collateral, just like LUSD is, which is a liquidity stablecoin on Ethereum layer 1. So, for example, like LUSD is a really sought after collateral for projects on Ethereum, and we see YUSD being the same thing on Avalanche, as it has the same sorts of economic mechanisms. So, as an example, like Fade Protocol executed a deal to purchase 100 million LUSD to back their own stablecoin, because LUSD is so like safe and trusted. And so I think that's a collaboration we're quite excited to pursue. And then a second thing is obviously MAG as collateral on Yeti Finance to lever up. This is pending a kind of final review from our economic security guys, and I think it's something we'll be hoping to launch pretty soon. But yeah, just pending final review and more updates that are coming.
And yeah, to kind of talk on. Sorry.
Yeah, one final thing is Magnet and Yeti. I think we both have this vision of building Avalanche together, and I know Magnet wants to incubate early stage projects, and like we're going to be right behind you guys, helping do that and helping grow Avalanche as a team.
Awesome. Want to make sure there's space for everybody else on the team if they had anything, but okay, so I love it. Everybody's been asking about MAG as collateral, and obviously it needs to get approved. We're hoping that price stability and it happens, and we can get in there. I think that'd be awesome to get MAG, borrow for YUSD, go put it in the stability pool, or leverage up your MAG or whatever. That amazing. And then I love the idea of using our treasury to LP maybe for YUSD on somewhere. I think there's some great stuff in the future. Looking forward to it. Who else have you partnered with on Avalanche, or who are you working with as partners?
Yeah, good question. So I guess in terms of like people we're really close to, I guess one is for sure Trader Joe. They've been helping us since the start. And kind of at launch, we plan to intake JLP tokens, Banker Joe tokens, X Joe, and also do kind of a lot of co-marketing and partnership work on that front. We also work really closely with the Benchy team. We plan on taking Q tokens, so QUSDC, QDAI, QUSDT, QAVAX, etc. That's kind of the yield-bearing supplied version of Benchy tokens. And basically, you'll be able to do strategies like, go 10x on QUSDC. And QUSDC's interest yield bearing rate might be like 7%. That times 10x would be like 70%. And also we're kind of hoping to work with players like Magnet. And kind of one reason why, I think Yeti touched it a little bit on it, was like why YUSD or LUSD is like very sought after. It's really because it's pegged to the dollar, not by fiat or some centralized entity like USDC or USDT is. And it's basically backed by a minimum of $1.10 in yield-bearing collateral. So let's say like AVAX, ETH, BTC, QUSDC, and whatnot. So that kind of takes away that centralized risk of, let's say, USDC or USDT. USDC getting regulated, USDT, there's not actual fiat backing for USDT. And that kind of just having that stablecoin in your treasury go to zero. And ours is kind of basically a mechanism that is designed for it to be $1. And that's kind of in the sense that you can redeem $1 of YUSD for $1 in underlying collateral. So we plan to do a lot of partnerships there with DAOs in using YUSD for their treasury. And kind of other product partnerships we see are things like working with people like Ribbon. So instead of just depositing AVAX onto Yeti, you can deposit AVAX onto Yeti and sell an option on that. And you might be able to get 20 to 40% yield by selling an option through Ribbon. And I think there's a lot of partnerships there. We're talking to people like Yeti Finance, Yield Yak, and stuff like that for things like vaults, and also accepting things like YRT tokens as collateral. But yeah, I think that's pretty much most of the things from the partnership side. We're pretty on the ground in terms of Avalanche, talking to new projects, talking to up and coming projects, as well as talking to projects on ETH that are interested in deploying on Avalanche and want to have kind of a solid partner there.
Awesome. I've got some questions coming in from folks in the channel. I want to give everyone a chance to kind of get those in. Maybe we'll have a speed round. If you want to hear a particular question in that AMA channel, please give it a thumbs up so that I can look at the most popular ones, make sure those get in, and we can ask the team what seems most relevant to folks. Before I get to those crowd questions, I want to make sure I ask this last one. We talked about roadmap a little bit. It sounds like there is a lot of potentials with kind of Lego piece that a stablecoin and lending platform can be. What do you think near-term future of Yeti is, maybe that you're more sure about, and further down the road, what are you looking forward to the most and trying to get out there for Yeti?
Yeah, that's a great question. So in terms of near-term future, like product-wise, that's definitely in taking more and more collateral. So basically both Avalanche native collateral and collateral that wants to be coming onto Avalanche from other protocols, like deploying on Avalanche. In terms of longer term product roadmap, we're thinking of introducing things like strategies, like there's on Abracadabra. So for example, you can just deposit, let's say, $1,000 of AVAX onto Yeti, and we can run a strategy like AUST, the anchor strategy, where you're getting like 120% APY through leveraging on AUST, which is basically deposited UST on Anchor. In terms of kind of like brand and kind of I'd say like public facing side, I think we really want to become like a flagship protocol like Trader Joe on Avalanche, where we really put out really good content, branding, visuals, hype videos, etc., and get people excited about Yeti and Avalanche. We want to be a protocol where people come to Avalanche to use us, and that's kind of why we've stuck on Avalanche. We want to grow the whole ecosystem and ourselves. And I think a part of doing that is working with, Avalanche native protocols, but also, appealing to the retail audience and users that are kind of just getting into DeFi and giving them a reason to check out Avalanche and Yeti and that kind of all the associated protocols that work with Yeti. So things like working with Magnet and Trader Joe to help incubate, develop, and grow projects that come to Avalanche. And whether that be through co-marketing, technical advice, support, and incubation, we're pretty flexible in what we want to do in the future. And kind of our really kind of North Star is just growing Avalanche and growing Yeti. And basically for us, we're kind of willing to do anything to do that. And we're pretty flexible in kind of what the future holds, for us. Because, I think in DeFi, like basically 2 months is like 2 years, no one knows what's going to happen. But one thing that we're sure of is that we're going to keep on building Yeti and keep on growing Avalanche, because we're honestly not really concerned about any like short-term fluctuation, any, kind of drop in price action. We really kind of see DeFi being something that exists, for the next 100,000 years. And that means that all we have to do is just focus on building, and kind of these short-term blips, in price or, in the market, in the long term, it's only going to be up. And that's kind of the thing we've seen in, the internet industry. You have the .com bubble, and now you have the internet industry. It's still thriving. It's, doing better than ever. And if you kind of let those kind of short-term blips, deter you and make you like stop working, it's not really a kind of a conducive strategy to building something really big. And that's kind of what we want to do with Yeti and Avalanche.
Nice. All right, I'm going to start taking some questions from the folks here in the text channel. Again, make sure to get those in. We'll try and get a couple questions in. I don't want to keep the team on forever. There are a lot of questions. Appreciate them being here. Maybe some speed round stuff even. What oracles are you guys going to be using to look at prices and make sure that things are stable for YUSD? How does that work? What's that like on the chain?
Yeah, great question. So, when there's a chain like Oracle, we're always going to choose that. But frankly, if we were to wait for Chainlink for every new collateral we use, we really wouldn't be competitive in the lending landscape. And, Chainlink's super conservative in terms of the types of collateral that they actually admit. So we have to go like with other options. So in terms of, for example, LP tokens, we're essentially using the Alpha Homura model. So this is like, very battle tested. They kind of use the reserves on the LP tokens to calculate a price based on the value of the underlying assets. And then for Curve LP tokens, we're using something called virtual price, which is actually a function just right on the Curve contracts. For just general assets on Trader Joe, we're not launching with any of them just like when we first go live, but we will be using some sort of TWAP. Most likely something similar to what Abracadabra is using already. Just in general, we always take the battle tested version as opposed to trying to do something new.
Totally makes sense. Yeah, use what you have, use the best that you can, and make sure it's been tested. There's a couple of questions on folks that you'll be partnering with or wondering about who you'll be partnering with. I've got mentions of YieldYak, Pangolin, etc. It sounds like, based off what you all are saying, you're going to work as hard as possible to build up Avalanche. You're starting with Trader Joe. Are you going to be expanding to using other dexes? Are you kind of AMMs agnostic? Is that your view on Avalanche? Is just pro Avalanche? We're all going to make it.
Yeah. So in terms of partnerships overall, really, if you know a project on Avalanche, we're probably in contact with their team. Probably working on some sort of collaboration, specifically on the AMM. So yeah, obviously Trader Joe LP tokens, and then also Curve LP tokens, something we're supporting. And then down the line, we want to work with Platypus as well. We've been in contact with their team for I think 2 months or so. They're great guys and building something quite innovative. So I think there's collaborations there in terms of collateral as well as working with them to build liquidity in our stablecoin with some sort of double rewards program. In terms of YieldYak, I think someone mentioned that. So YieldYak, like they give receipt tokens for assets deposited, and I think those would be decent collateral as well. Those also have to be reviewed by our economic security guys, but should be something we can introduce as well down the line. And yeah, so Leon just asked Beefy. Yeah, same thing there.
Awesome. Yeah. I've got a couple of questions, and there was some chat earlier as we were talking about tokenomics. it looks like you guys, for your team token investings, this is always something that folks are interested in. I think we've all had maybe bad experiences where we've been dumped on by a pre-sale, VCs, or even a team. What is your vesting period like for, I think the first 3 months is after 3 months, first tranche vests. What's the remaining percentage of that after the 3 month? How is that going to work for your vesting for the team tokens?
Yeah, actually, I saw a lot of questions in the AMA about this in the AMA questions channel. And yes, actually, the docs are not quite updated. So based on some advice from CryptoFish, Trader Joe, and others, we're switching to a linear vesting schedule rather than this like at least somewhat more ambiguous version where it's a curve as opposed to linear. And so there's no team tokens vested at all for the first 3 months. And vesting begins after the protocol has been live for 3 months. So at the 3 month point, team has 0, and it's linear vesting from there. So the team tokens will be fully emitted after 4 years, and this will all be updated in the docs. And I think when we launch, check out the smart contracts where the locking is done and they'll be verified and quite clear. I think overall, we hopefully made it clear, like, we're very long-term oriented and trying to take this from where we're at right now to a multi-billion-dollar protocol and a pillar of DeFi. So that's where we're headed.
There's a question in here. It's a reflective one, and I always like this type of question, and sometimes it can be hard to answer. But the question is what parts of the Yeti protocol at launch are you maybe not necessarily? Maybe you're happy. You're obviously happy with it. You're launching it, but is there something in that launch that you're immediately like, yeah, I want to see this improved. I want to expand this. I want to extend this. What's that one thing that you're like, I wish we had more time, but we need to launch. We're in an MVP state, but here's the next thing.
Yeah, it's a good question. I think one thing is, we expect other people to build this kind of on top of Yeti, but it would be cool for us to build ourselves. Something like a stability pool vault. And so, like, what that means is when you deposit your YUSD in the stability pool, you participate in liquidations. So that YUSD is used to pay off risky loans, and then you get liquidation rewards. And the collateral you receive should always be worth more than the YUSD that you're paying back. So it's a profitable exercise. And at the same time, you're earning Yeti rewards for putting your YUSD there. And so the stability pool vault, what it would do is when liquidations occur and you're getting some collateral from a trove from a loan that's been liquidated, it will automatically sell that asset, sell that collateral, and then buy back YUSD off the market and put it back in the stability pool. So essentially, this kind of maximizes the amount of YUSD in the stability pool and make sure you continue earning yield. In order to execute this, I think it's important to make sure that YUSD has sufficient liquidity to do this in a very safe way. But this would be a nice added feature, and I think it'll be coming soon.
Love it. You mentioned Redacted and kind of maybe working with them in the future on Curve and kind of locking in liquidity and making sure that's going to happen. There's a question here, pretty popular. It's all about liquidity in some ways, and Curve Convex have seemingly figured it out. How are you trying to position in that to make sure that your liquidity is the deepest, the most accessible? What is that looking like for you as you go to launch?
Yeah, great question. I think this is extremely important for any stablecoin protocol, like much more so than liquidity for the average protocol token, and something like Truco and I think a lot about. So as an overview, I think in the long term, it's not the best strategy just to give up farming rewards constantly to Curve LPs. Really, what you want to be doing is, first of all, owning your liquidity, and in the long term and the medium term is utilizing bribes extremely efficiently and accruing Curve voting power. So essentially on Curve, there's a voting system where curve rewards, the curve token rewards, are distributed to different pools. And if you control the votes, you control where that curve goes. And so right now the market rate is kind of like, if you spend $1 bribing curve voters, the return on investment is essentially you can get $5 worth of curve rewards. So it's much more efficient than the traditional farming. And so really what we're doing with Redacted, or at least the potential collaboration, is they own a ton of CVX. And so essentially we're collaborating with them where potentially they get some YSD bribes or Yeti bribes, and in return they vote for our pools. Similar to what you would do with other bribing services, but in a kind of protocol to protocol fashion. And the benefit there is that they will diamond hand Yeti as opposed to just paying random curve people who might dump that. So it's really, in terms of the stablecoin liquidity, it's really about utilizing bribes efficiently, utilizing curve rewards efficiently, and in the long term, eventually owning our protocol using bonding, owning our protocol liquidity with bonding.
Nice. Yeah, I love it. I seeing a team that's thought about it, so deeply is really exciting. And to hear that you're, starting to work with partners already is pretty cool. Even before launch. I think the final question I want to go with, I'm not seeing too many other ones that we haven't answered in some way, is your stablecoin platform. Stablecoins have kind of come under the regulatory lens recently in a couple of different ways. Is this something that you're concerned about? What are you thinking on this as a team and a stablecoin especially? Is that something that you all have considered? Obviously, you're anonymous as a team. What are you doing to make sure that Yeti and YUSD is, if something happens to stablecoins in the US, for example, how are you making sure that it's still going to be a thing in the future?
Yeah, great question. So basically, why we like DeFi and why we like blockchain is that it's decentralized, and there's no way the government could take down like a blockchain. They could, let's say, if it was very centralized, but if the blockchain is decentralized, it'd basically be impossible to do so. And in our case, with that in mind, we're basically willing to do anything it takes to keep on running and developing the protocol on Avalanche. And what that means, like moving to different countries or different areas like FDX has done to maintain operations, that's something we're absolutely willing to do so. We've seen protocols on ETH do things like burning the admin key, just to completely decentralize the protocol. And these are kind of things that we constantly think about. And we always look at new framework of how to keep the protocol moving and keep the protocol going forward. Things like, decentralizing the front end, allowing anyone to be a front end operator, and just having our protocol run on the Avalanche blockchain. These are all kind of things that we constantly think about. And we do work with two actual different councils to kind of think about decisions that we make from a kind of a regulatory and legal standpoint. We're constantly, keeping up to date of what's happening on the legal landscape in multiple jurisdictions, and seeing, how can we push this area forward, and hopefully in a compliant way as well. We want kind of stable coins to be something that can be used by, a normal person in the day to day. And I think there is a future where that happens. I think there's kind of a lot of, blur and kind of FUD around, regulation and what's going to happen. But what we've seen from, a lot of innovation with Airbnb or Uber, there's a lot of kind of regulation and fines and penalties at the start. But eventually these things kind of become accepted. Before the internet was something that people warned against, and, we're trying to things like, like music sharing, for example, Spotify. These things were kind of, were regulated against, but eventually they've come to fruition in some type of more compliant form. And I think one way Avalanche is doing this really well is in the form of subnets. A country like Singapore or the US could run their own subnet, and they could kind of whitelist, or there's could be some credentialing process of allowing protocols to deploy on that kind of subnet. And that's something that we could see Yeti participating and working with to do. But yeah, that's kind of our opinions on regulations, kind of the future of DeFi.
Awesome. Well, thank you guys so much for being here. Is there anything during this conversation that you wanted to bring back up, emphasize, or maybe that we missed that you want to leave us with?
Yeah, one good point is that even though we're a non-dev, it's something that we like to do for the culture, privacy as well. We are doxed to people like the Avalanche Foundation, people like CryptoFish. We're not here just to kind of take your money and run. We kind of take security and building safely and securely very seriously, and that's kind of why we've spent $500,000 on security of kind of pushback launch, and kind of we really focused on building something really innovative, something that really pushes DeFi forward, something that's new and unique to Avalanche. And we kind of want to be one of the cornerstones and kind of pillars of Avalanche, and kind of propel this ecosystem to $100-200 billion of TVL.
Let's do it. I love it. Thank you guys so much. I really appreciate the pro Avalanche building it up spirit, working with everyone. Really excited to be working with you all in the future, and whatever that looks like. Here at the Magnet DAO, we are all about incubating new crypto projects, using our investment, our innovation fund, 10% of our treasury, to get that out there, bring yield back to our DAO and our holders. Using our treasury in stablecoin farming is another way we're doing that. I'm excited to be working with you all, the rest of all these Avalanche teams. And really appreciate y'all being here, and thank you to the folks that showed up for the AMA, listening in, asking questions. LFG, we'll talk to you guys later. Thanks so much for being here.